let's go and start with the day since we had short time. Um, in the last four sessions, Shawar, I'll summarize this for you and then I'll give you the floor to you. So we had a series of webinars. In the first webinar, the enterprise, we try help our fellows or startup understand the whole picture of the enterprise or entrepreneurship. So in the first session, we talk about how ideas are created, how a product can be developed, how a service idea can be developed. So we went into a detail. Then we discussed about how they can develop their business model, how they can do market analysis, how they can do their stakeholder analysis. Then we went through a pitch, how they can develop a page, how they can brand their venture, how they can market, and how they can do sales. So we talk about sales, branding, marketing, pitching, and then we touched on how they can make effective teams, which of course is one of the key part of the enterprise.
আলহামদুলিল্লাহ ভালো আছি। আমি রিজওয়ানুল হক, ওয়াইসিস অ্যাডমিন এন্ড এইচআর
About
ডিপার্টমেন্টে একজন অ্যাসোসিয়েট হিসেবে
me
বর্তমানে
also,
যুক্ত আছি। আপনার সম্পর্কে যদি আমাদের একটু বলতেন।
Najwal, can you make yourself mute? Thank you. So in the fourth webinar, we had a very technical discussion on proposal and grant writing, where we had a grant and proposal writer expert who writes both on corporate side and on the non-for-profit side. So he gave us a key insights about how a proposal can be developed and what are the key elements of the proposal. Today, we have more of how fund can be raised, which is again linked to the previous session as well, and how they can manage their money, because most of the startups which are here, they also get some funds, grants from the resolution project. And they utilize it for their enterprise. And then legalities, because it's important to register your enterprise, complete all the legalities, complete all the compliance related requirements. So this would make our circle complete for them to understand the enterprise in a holistic way. So Shewar, thank you so very much for joining. Shewar, I would really like you to introduce yourself because I believe you can do just as well than me. So thank you again. I know you have been very busy. And for the fellows, please ask as many as question you can. Shewar will introduce himself, but just to tell you, Shewar is someone who has a great role in the entrepreneurship ecosystem. He has been doing amazing. These days, he is looking after incubation. He will explain that as well. But for you, this is an opportunity to ask any kind of question that is in your mind. We will have the question answer session in the later part. But in between, if you have any question, Shawar would be happy to answer you. Shawar, the floor is yours.
Yeah, thank you so much, Aziz. Hello, everyone. Thank you so much for having me and giving a great preamble as well, so that I became familiar with the background, what has been achieved, what has been done so far, and really great to see some people from diverse background, from different walks of life, from different regions. So I have two rules, like to conduct my sessions. One is that to make it more interactive and engaging, I would appreciate if you can switch on your cameras so that we can see the visuals and see the expressions and see that how our learning is progressing. Number two, if you have any questions in mind, don't hesitate to ask. I will be open to respond between the session or at the end of the session. So we will be flexible. I'm going to share my screen and we will formally start with that.
Or with the video part, so they have been very shy since the beginning.
Okay, right. So I think it's a global phenomenon. Since the COVID time, the world is changing now, and the people are being used to of virtual meetings and virtual sessions. So I think it's gonna take some time, but I as you have been part of such a diverse community, I would appreciate so that we can see and we can interact virtually at least by looking at each other. So moving forward, the today's session is about financial management and legal compliance. So I will try to touch upon all the critical part of financial management and legal compliance. So before we deep dive into the session, I will give you my brief introduction. Can anybody confirm me by raising the hand that they can see my screen? Yeah, great. So my name is Shahwar. As Aziz told, I will give you a brief introduction. I have been affiliated with the startup ecosystem from past 12 years, working with startups day in, day out, helping them to grow, helping them to be successful, and running my own startup that is working on basically refurbishment and plus carbon footprint. So what I specialize is in program strategy development. Then I have mentored and coached more than 1,000 startups from different vertical. They were from agri-tech vertical, textile tech vertical, then technology, SaaS-based platform. Plus my area of specialization also includes networking, linkages, and investment trades as well. So that's a brief introduction. Because we have very limited time, so I will skip this part, and you can go later on my LinkedIn profile and get connected over there. And if you have further details, you can look at there as well. So moving forward, before we deep dive, I would have one basic questions, right? So my question would be, how many of you, I know most of you are at early stage of your startup, and some of you are already on ground, have validated their idea and might have found their product market fit as well. So I would like to know how many of you are doing your personal financial management. Does anybody do their personal financial management? Do they keep the check on their finances, that how much money they had in their bank accounts or in their personal savings, and how they are spending, what are their spending patterns, and how they are saving on a day-to-day basis? Can anybody share their story? Guys, I want to keep it more interactive. So Aziz, with your permission, I would also like to add that all those who will be interacting more during our session, there will be a surprise at the end of the session for those who will be actually actively participating during our session. So anybody who would like to share?
From me, I just want to share, I'll take a start. For me, I have my own Excel sheet where I track all my expenses. So
great,
on a
great.
weekly basis, yeah.
So I think that's a great beginning. Aziz, thank you so much for sharing your expertise. Anyone else? Alex, I am saying, yeah, please go ahead.
Yeah, actually, I'd feared to say, because I know some enterprises are using some software, but at Unega, we use Excel sheet to manage our financials.
Yeah.
And,
so if I give example, we might not stuck in a structured way or in a formal way, we might not be keeping budgeting or software, as you mentioned, Alex, but definitely everybody keeps checks on their finances, on their inflows and outflows, in a way that when you plan a budget, a monthly budget for yourself, for your studies, for your household, for your earnings. So definitely you keep somewhere that I need this much of money for which you put the effort, right? But you don't document it in a way that it could be used for the forecasting, for the analysis, for the future analysis, so that you can decide that in coming times, in 6 months times, in 1 year time, how much funds you will be required, right? So that's basically a differentiating part between a professional and a personal financial management. So when you are conducting a startup, a business, or an enterprise, you need to take care of your funds in a more structured and a formal way. So this will be the topic of our today's session. I will share the brief agenda. First, we will discuss about the financial management, that what is the structure of financial management, what are the integral part of financial management. After that, what are the compliance required and reporting required for the different stakeholders, right? For our own self, for stakeholders as well, we'll be talking about financial compliance requirement and the reporting requirement. In the third area, we will be talking about the legal frameworks, that when any enterprise operates in any area of the world, they need to follow some rules and regulations set by the respective authorities. So what are they, the primary and the standard legal framework that need to be followed to operate in certain regions and the certain part of the world, right? Moving forward, we will then move towards the enterprise framework, that what are the internal processes, documentation, or framework need to be implemented for a successful enterprise, right? Last part of our startup, I will just shed light on the startup roadmap that in your future journey, entrepreneurial journey, or the enterprise journey, what are the things you need to be take care, and these resources will be available with you. Or definitely, as Aziz mentioned, that you will have recording of this session as well, so you can keep it as your Bible, I must say, whatever book you follow, holy book you follow. So these could be a reference point for you. All of you, that you can use it for the future. Even this program is concluded or this boot camp is concluded, this will be helpful for you guys.
And Shawar, with your permission, we would also like to share your presentation with them as well after the session.
Yeah, why not? Definitely. Knowledge sharing is, I think I will always encourage that thing.
Thank you,
So
Shawar.
moving forward, before we go hardcore on the subject, I have some exercise for you guys, just to assess that where we stand as a group. Basically, it's a learning process in a both ways, that I will be learning new things from you guys and you will be learning something from me today as well. So moving forward, I have designed 10 basic multiple choice questions for you guys. I'm sharing the link of that questionnaire in the chat, and I will request all of you to, you guys will have 2 minutes to attempt these 10 questions, and then I will share the results so that I can have basic understanding. So this is customized designed questionnaire, very basic questions for this particular workshop. So I have sent a message with a link to that questionnaire. So you guys can go into the message and just click on this link and attempt the questionnaire.
Even if you're online from mobile, so make sure you visit and you can fill it, right?
Yeah.
In case any one of you is facing any trouble, so just let us know. Shawar, on the back, you know who is submitting, right?
Yes, Aziz, I have the data. I will give you the access to that
Okay.
backend so that you can have it later on as well.
Mm-hmm.
And in fact, you can run a post-session survey as well, so that you can compare the both results.
Okay. All right. All right.
So guys, your time is already up, but I am giving you an additional minute so that you can complete it timely. I can see a couple of entries so far. So we have like 17 participants right now in the session, and if I exclude myself and Aziz from this list, so we have 15 participants, but I have received 6 entries so far. So 6 people have submitted their exercise. So, okay, I believe without further delay, I will just share the overall highlights of the scores. So, 8 entries, right? So now I have just refreshed, so we have 8 entries in total. So out of these 8 entries, 80% of the people, they have answered correctly. That's really surprising, at least for me. Basically, in first attempt, when you are attending such sessions, so you guys already have technical knowledge and insight. That's great to see. But moving forward, the 2 people who have been like on the other side of the uh, river, they need to look into these responses after this session as well, so that they can compare, and Aziz can share you the report. Aziz, this particular platform actually can give you individual responses as well.
Sure, I can share that as well.
Okay, so I hope you enjoyed this exercise. So moving forward, we jump into the financial management part of the session today. So just to give you an overview that there are 80% of the startup that fails within a 1 year, right? And those out of those 80% of the startups, 29% of the startup are those who could not basically effectively manage their finances and their revenues, right? So today's sessions, what we are going to see that how financial planning is done, how budgeting is done, and how cash flow management is carried out uh, during enterprise management or the startup life cycle. So why financial planning is necessary, and why financial management, what are the objective behind that? So primary objective, if I see with the lens of internal customer, so first of all, we need to check on the cash flows, that how many expenses are being done and how many income streams we are generating the revenue. Second, we need to basically see if we are interacting with some financing agencies, some grants, they have some compliance and requirement to submit your finances, so that they can look on that how money is being spent, how effectively money is being spent, and what are the returns being or what are the impact being created in the with their money. Plus, also, if we go for the investors, there are 2 type of investors. One is institutional, and the second one is non-institutional. So if we talk about both, they wanted to see their returns on investments, that how much money they will be getting back after X period of time if they have invested in your startups, right? It could be otherwise in case of grants or the funding. They might not be keeping check that what will be their return on investments, but definitely they will be checking your expenditure sheet, your cash flow statement, so that they can they can report to their agencies, respective agencies, that this much fund or the grant was awarded to this particular startup, this particular enterprise, and this is how they spent this money into the cause. Then it helps you managing the strategic decision that this much of revenue has been generated at certain point, and this much of revenue needed for sustainability of the enterprise or the organization. And it also help you make decision about the growth of the enterprise and the startup. Plus, last but not the least, if you are operating as a legal entity, which is second part of our session today, then you need to submit some financial statements to the regulatory authority in your respective region. In most of the cases, it will be like company registration or the tax registration authority. They are more keen into your numbers, that how money is coming into the business and how it's been spending, so that accordingly you will be graded into the respective tax nets. So moving forward, this is the basic about financial management, that what are the areas in the financial management that we do the planning, budgeting, and then collect cash flow management, and why it's important, what are the objectives behind it. So before we go further, I would like to share a brief video with you guys that will give you an idea about the importance of financial management and some basic terminology about financial management.
Just like you need air to breathe, your company needs cash flow to stay in business. Many small business owners avoid managing the money part of their business. This could be because it may seem difficult to understand. Financial statements look intimidating. It's more fun to work on marketing. They have hired a bookkeeper, or maybe they are too busy. It's important to pause and look at your numbers often. Your financials tell you about the health of your company. If you are feeling intimidated by financials, this video will help you master 3 key concepts. Our first concept is cash flow. It is important to know when the money comes in and how it is being spent. You want to ensure your bill collection and payments are on time. Doing this will help you stay on track and plan for emergencies. If you run a seasonal business like a landscaping company, your cash inflow for the entire year may happen in just a few short months. You will need to plan for costs, such as rent and utilities, when business slows down. The second concept is startup costs. To calculate your startup costs, list all expenses you can think of that might be required for starting your business. There is no magic formula beyond that. When you're in the planning phase, you may find some costs that aren't yet covered by sales. Knowing these costs allow you to know how much cash you should have in the bank before starting your business. Here are a few examples of startup costs. One-time expenses, such as permits, licenses, registration fees, logo design, business cards, website, down payment on rental property, and leasehold improvements. Ongoing expenses, such as rent, payroll, taxes, accounting services, insurance, utilities. Investment in assets, such as equipment, inventory, furniture, and vehicles. Finding these costs will allow you to know how much money you need to personally invest and/or finance to get started. Just add them all up and you have your number. See? That was easy. Our final concept is the break-even point. So you want to start recovering your costs, paying your expenses, and generating a profit from your business? You will need to know how many products and services you must sell and at what price you need to sell them at. To do this, start by understanding your company's break-even point. The break-even point is the point at which your sales will exactly cover your expenses. Determining the break-even point allows you to know the level of sales needed to cover all costs and start earning a profit. To calculate this number, you need to know 3 things. Fixed costs are costs that your business pays whether you have sales or not. These items include rent, taxes, salaries, and any other monthly expenses that do not change. Whether you sell 1 product or 20, you still need to pay these expenses. Variable costs are costs that change based on your number of sales. For example, raw materials, factory labor, and sale commissions. Finally, you'll need to determine your selling price for your product or service. Remember, whether you're just starting in business or creating a new product or service line for an existing business, you can adjust this selling price up or down as you start to calculate. Here's an example. Quality Totes Limited is a new company wishing to produce designer handbags. The company has calculated that it has fixed costs that consist of its utilities, owner salary, rent, and property taxes. Those equal $80,000 per year. Their variable costs are the raw materials, leather, fabric, clasps, 1 part-time contract seamstress, and 1 family member who has offered to work for sales commission. Based on this information, Quality Totes Limited estimate their variable costs will be $18 per bag sold. The bags are priced at $68 each. At this level of sales, they must sell 1,600 designer handbags per year to cover their total expenses. At this selling price and with these expenses, Quality Totes Limited will not make any profit Unless they sell more than 1,600 handbags, they will only break even and cover expenses. Try this formula for your own business. See how cutting your costs or adjusting your price impacts how many products or services you need to sell to break even. Want to learn more about how cutting costs or adapting your price changes your break-even point? Download the Break-Even Analysis Worksheet in the Business Link online toolkit. Now, take a long, deep breath. You're well on your way to understanding how to manage your business's money. Learn all you can about the other formulas you can apply to your business by downloading all the financial resources from Business Link.
Right. Thank you so much. I hope it will help you guys. I try to basically add some multimedia content. If you talk about financial management in general, it's a very dry subject. So I try to give you an animated example so that you can learn really quickly, very fast. So in this video, we have learned three basic concepts. First was cash flow management, then second was expenditure, and third we learned about break-even analysis. So we will talk about these formulation in detail. But before that, we need to understand some basic terminologies about the financial structure, that what will be the terms you will be using while managing your financial wealth. So moving forward, first is assets. So as you see in the video, they just mentioned or referred about the assets. These are some, these could be in the form of cash, building, vehicles, patents. Patents are actually intangible assets, you can say, stocks and real estate. But every business may have different assets with respect to their domain of operations. So assets are those things who are owned by the businesses who basically which are used during the operation process for the development of product or services. And then we have liability. Liabilities are the obligations or the debts that are owned by an individual in process of producing those product or services. These could be loans, mortgages, outstanding bills, then it could be investment, return on investments as well. Then we talk about the equity. Equity is a share invested by the founders or the business owners into the company. This could be in the form of cash, capital investment, retained earnings, or the common stock that has been brought to the business or enterprise. Moving forward, next is revenue. Revenue is the money or the income that is generated by the selling of product and services. It could be in form of sales, fees, subscription, and royalties based upon the nature of your business or the enterprise operations. Moving forward, we have expenses. To generate that revenue, we need to, every business has to incur some expenses. It could be, as we've seen in the video, it could be fixed cost expenses and it could be variable expenses. So fixed cost expenses are those which are due to incur irrespective of the size of the production of your products or services, which can include salaries, utilities, and the rent, and raw material and other variable cost. It could be part of your variable element of your expenses. Moving forward, profits. This is a money, if I talk in the plain language, then it will be income minus expenses, right? But finances has some deep terminologies that income minus expenses not only give you numbers that are considered to be as a profits. There are some other additional costs that incurs for running a businesses. That includes the legal fees, the taxes. So once we detect those additional costs, then we will be able to tell the right projections, which is called the net profit. So any profit that is measured before applying these costs is called the gross profit. And after applying all these costs, that includes taxes and any fees, legal fees, or the structural fees, or the commissions, then we will have the net profits. Loss, if expenses are higher than the income, then it is treated to be as a loss. And there are two major type of losses. One is net loss, and then second is gross loss. Similar nature of the loss is applied as we discussed about the profits. Moving forward, return on investment, particularly linked with the investors, if they bring some capital into your business and they inject some capital or the money into your business, definitely they look forward that how much profit or the money they are going to make over it, right? So this is a simple plain formula that you have to divide your net profit with the investment brought by external stakeholders and multiply it with 100. So you will be able to know about the total percentage or the return on investment. Dividends, it's a form of once you establish an enterprise or the business, you allocate some shares to it, and every person who brings some capital or the investment to the business, they become the owner of that dividend or the share into the company. So it could be in form of cash dividend or the stock dividend. So once any enterprise start making profits, so they basically divide that profit over the number of shares, and that has been transferred to the people who brought the investment or injected money into your business. Loss is interest. This is very like least stage. When I interact with the startups, there is a misconception that they need funds to run their businesses. So I tell them like there are other methods before they go for the loans or the investments. They can do the bootstrapping as well. And they can borrow the money from their friends and family circles as well, so that when they're paying back, they don't have any additional cost to add on to the basic loan or the investments. So interest are those amounts which are being paid in addition to the money which they have borrowed or the lend from other sources or the other stakeholders. So this is overall picture of the financial management. That financial management activity covers the planning, raising, controlling, and administration of the funds. So before managing your funds, there are basic structure you have already learned about that. I just mentioned about them. You need to do some basics to plan well, to manage well, and to administrate well. First of all is that you need to record those transactions about cash inflows and cash outflows, that how much money is coming into the business and how much money is going out of the business. Coming in could be in the form of revenue, in the form of profits, and money going out means it could be in the form of expenses, in the form of taxes, in the form of other expenditure, fixed cost expenditure or the variable cost expenditure. Bank balance, basically when business operates in general circumstances, when I asked about the personal financial management, you can keep it in the form of cash at your own place. But when you operate an enterprise, so most of the transactions are being recorded and stored at some institutional financial institutes. So these financial institutes normally call the banks. So you must know about the bank balance, that how much money is there in your business account or in your enterprise account, so that you can make and plan the decision accordingly, make planning and budgeting of your incoming expenses or incoming requirement for the raw material or the supply or the services or employee salaries. So you can have clear idea that how much money is available with you in the bank and how much more funds you will be requiring over the certain period of time. Money coming in mean the revenue generating by the business. It could be revenue, it could be investment, it could be lending, it could be in any form. Then money going out mean expenses, and it could be in different form. We will be learning about the different form of expenses in the next slides. So CAGR, it's a very common terms in the startup ecosystem and the enterprise ecosystem. We called it compound annual growth rate, right? If you're, for example, if you're doing business into the fashion industry or the cosmetic industry, so you need to see that what is the overall growth rate into the overall industry and what is your own growth rate, your own business growth rate. That shows that whether you are you're making progress into your venture or you're just below par as per industry standard. So it helps you and it helps the investors to make the decision whether they are coming and joining your ship or not, based upon the progress you are making so far. For example, if you are making progress at the rate of 10% per annum or 10% per month, but as per industry standards, compound annual growth reflects that this industry has potential up to 30% growth or 35% growth. So it means you are making progress at a very slow pace. So you need to do some tweaking into your business model, into your operations, into your structure, so that you can reach that certain level where you can win the confidence of the investors or the banks where who are lending you the money for your business operations. CAC, it's a cost of customer acquisition, a very important terminology in the financial management. Cost of acquisition a customer mean if you are producing a product or services, it's not only the cost or the expenditure that incurs in the business. You need to include some cost to acquire the customers. So it could be a marketing expense, it could be a sales expense, distribution expense, or the retail expense. So you need to make account of those costs as well, so that when you show some projection in your financial feasibilities, that will reflect that if you need to acquire a market or capture a market, if you're claiming that you will have like 50% of the share in the market, then investor will be interested to know that how much money you will be spending upon acquiring those 50% of the customer from the market. So you need to calculate that CAC as well. I will show the formula in the later slides as well. Then ARR, annual recurring revenue, that how many repeat customers are coming back to you for your product or services. This actually cut off your CAC. So if you are attracting 1,000 customers in the first go, and you see that 500 customers are coming back to your businesses, so those 500 customers are repeat customer, and you won't be spending customer acquisition cost on those customers. Instead of that customer acquisition cost, you can use that funds or the money for the promotional activities just to keep those repeating customer engaged with your business over the certain period of life. So we call it LTV, lifetime value of a customer, that how much money he or she will be bringing into the business. ROI, return on investments, again, I already explained it in the previous slides. It will be the additional revenue or the additional earnings which stakeholders who brought the money on the table, they will be looking at that if they invested $100,000, then how much they will be getting in return after a certain period of time as per agreement with the enterprise or the founders. Break-even point, that is a point where your expenses are met with the total revenue. So that is a break-even point. And after break-even point, we call it 0 point as well. So after that 0 point, your startup starts making progress, right? So you to reach at a certain point where your business seems more promising, you need to have as quick as possible your break-even point. You need to calculate that if you're producing something or if you are offering some services, so this much of amount of cost will incur. So you need to find out the ways that how you will be making equivalent revenue. Otherwise, what happens actually, if startup for a longer period of time, they just burn out their money and they don't generate the revenue to meet their costs, which are incurring on regular basis. So they go into the death valley. So death valley is basically that is the very next to these points. Death valley is the area where the fate of any business or any enterprise is decided, whether it will be going to be alive or it will be dead, right? So if you have to stay alive and your business need to be stay alive, then they need to maintain expenses. Expenses need to be remain to be static, and revenues should always be increasing. But otherwise, you will be default dead if your expenses keep increasing and your revenues remains either static or decreases by the passage of time. So you need to get out of that death valley as quickly as possible to meet your break-even point, then move forward and generate more revenue with the more optimized resources and more constant or static expenses. So how there are other few terms which will be helpful for you guys to calculate some basic things that burn. So what is the burn rate? Burn rate is basically tells you about that how much money is going out and how much money is coming in. That tells you your monthly projections. So for example, if you are spending $1,000 on your business operations and salaries and other stuff, and you're just generating $500 per month, right? So your burn rate is 500. So you are in deficit of $500 to reach that break-even point. So the burn rate reflects that if you have bank balance of, for example, I say $5,000, so you can say that okay, I'm burning, my burn rate is $500 per month if I stay on this path. So you can then imagine within a 10-month, that will be your runway. You will be default debt, right? Your business will be default debt because you won't have further funds to basically fuel your business, to run your business. So you have to make sure that your bank balance and average burn rate is always in check and your runway keeps on continue. And there is other way possible that you might need some investment for the expansion. Your initial cost could be higher, but by the passage of time, when your capex are completed, your assets are in line for the production of these products or services, then your burn rate should be either in negative or it should be on zero, and your runway should be positive for a certain period of time to stay alive. Growth rate we see by dividing the money in the revenue generated in month 2 minus month 1 divided by money in month 1, the closing cash in month 1. So you will be able to see that how much growth you are making every month. So I have already explained the default alive or debt concept. So moving forward, to see your progress or so see your numbers in real time, you need some you do the transaction recording, but how transaction recording are being presented to the stakeholders or for your own analysis, there are certain templates or the method, we call it cash flow statements, balance sheets, and income statements. And they have some certain benefits. Income statement shows you the profit and loss state of the any enterprise or the startup. Balance sheet show you the state of assets and liabilities and the owner equity into the business, and cash flow statement shows you the money in, money out status on certain period of frequency, like monthly basis, quarterly basis, biannually basis, and the annually basis. So annually, you will have some compliance requirement to submit it to the authorities, but for internal review and analysis, and for the projection and for the planning, you can do it even on the weekly basis as well. So moving forward, I talk about the financial pyramid. This is very important to understand that once a business is developing, so is the financial pyramid is developing, right? So with the business, once you set up foundation, you need to basically develop a cap table. We call it a cap table that basically defines the share or the part of the business for the different partners, stakeholders, investors, and definitely owners. And it could be reflected in the form of balance sheets, then processes that shows a cash flow statement, whether we are making profit or we are going into the loss, that is being reflected in the income statement. And your business recipe or the business model, that is shown into the business model diagram that has 8 integral components. So this financial pyramids tells that how much money is being spent in which area of your business model. For example, if your administrative cost as per your business model is going higher, so it means you need to revisit that area and how you can minimize those costs, or how you can make your processes so efficient that the cost incurred into particular area could be minimized. Then next form, once you have complete clarity on the balance sheet, income statement, and your business model, and you have certain numbers, then you can do the planning phase. And the first step is budgeting. So you can have long-term forecasting as well and operating budget. Why budget is important? Basically, it helps you making decision for your own businesses as well. And it could help others outsiders to understand that where your business is going to be in the future. And last but not the least, some monitoring element comes through monthly financial statements, which I mentioned on the last slide. That includes a cash flow statement, then we have a balance sheet and income statements. So this is a financial pyramid which you need to keep in check while managing your businesses. So if I classify overall business, so as I said, balance sheet is basically reflects assets that are equal to liabilities plus honor equities. So if I go and see any business that how they are operating, so I will be looking at two things. How much honor or lender, it could be investor, it could be your family and friends, it could be financial institute, how much they are bringing into the business, a business, and that business is spending in which way, how much they are spending on the assets, how much they are spending on the operations. So this is how basically business is evaluated or business financial health is assessed. So first three tier are basically contributing to drive our balance sheets, and last operations where income is the cash flow are going in and out, that helps to develop our income statement, right? So if I classify these two are the financing activities where owner and the lender bring the money into the business, that is called the financing activity. And when we invest into the particular asset to build a business, it could be land, it could be machinery, it could be, for example, any other asset, it could be what I say that it could be plant, it could be machinery. So these are the investing activities. Then last part, operating activities, we call it operational activities or the operational expense. But these are all recorded into the cash flow statement. So there is a basic concept into the financial language that is called ALICE. So it comprises of 5 terms. A stands for the assets, L stands for the liabilities, I stand for the income, and C stands for the capital, E stands for the expenses. So when our assets are increasing, we record it as a debit, and when our assets are decreasing or their value is decreasing, value mean if you have purchased an asset, but over the period of a year, we definitely call some depreciation over it or the appreciation over it. So that's how we decide the value of the assets. Then liabilities, if they are increasing, if we have to pay to our vendors, if we have some outstanding checks or we have some payments to due, if they are increasing, so our statements are credited. Otherwise, if our liabilities are decreasing, then our statement reflected as a debit. Income, if they are coming in, if they are increasing, they are recorded as a credit. If they are decreasing, they are recorded as a debit. Same goes with the capital. But in case of expenses, if we incur any expenses, for example, salary expenses, so if they are incurred, they are recorded as a debit. And if these expenses are coming down, for example, operational expenses are coming down, or the administrative costs are coming down, or the marketing costs are coming down, they are recorded as a credit into our statements, different statements. So why financial statements are important? First of all, they help to assess the performance of the company for the business owners, for the executives, or any other stakeholder into the business. And stakeholders also keep check on the capital, that how well it is being managed, whether money is being spent very effectively or wisely or not, or just being wasted, their funds are being wasted. Then definitely investors, when they look at these numbers, then they are able to make decision about it, whether they are going with this business or not. So they see the opportunities into it. Then lender and supplier, they basically see the credit worthiness. If you're operating in an ecosystem, so definitely when you start some sourcing some raw material, in initial period of your business or the enterprise, you have to pay like upfront payments or the expenditure. But as far as your businesses grow and you spend some time into the market, and people start trusting on you, they believe, they have confidence in you, then they give you some credit cycle or credit margin, and they give you raw material or any other services or the products on some time bond activity. They give you some time for that to pay back to them. So this is really important, that these financial statements should reflect positively, and you are keeping record of your transactions as well, so that you can build the confidence of the investors, lenders, shareholders, and even for your own self and for your executives as well. So these are the 3 primary statements. Balance sheets. Balance sheets capture the information, financial information, definitely. Financial information about your assets, liabilities, and honor equity at the given time frame or the any given date. Income statement it shows in the name that it reflects the revenue and the expenses being occurred by the businesses over the period of time. Cash flow statement, it is the daily transaction which reflects that how much money is coming in and how much money is going out of your businesses. So if I talk about the financial life cycle, that a business, how there is a two life cycle. One is business life cycle, second is financial life cycle. So business life cycle is starts from the ideation and it goes till if you are going to exit, or if you are going to grow, or if you are going to be IPO, right? But financial life cycle also starts with your with the start of businesses. When you conceive any idea, definitely there is some time being spent on that, and that time should be charged. It could be intellectual property, it could be intangible documents which will be used in the later phase, which will be the foundation of your businesses. So there are some costs associated with those documentation, those processes. For example, if you get some idea and this is a very novel idea, yeah, or the invention, innovation, you want to make it like patent. So you go for the WIPO, World Intellectual Property Organization, and you submit some document, and producing those document cause you some expenses. So this all starts from phase one, when you conceive the idea and you translate that idea into some tangible form or the intangible form. Phase two is when you start developing the prototype. If you're offering some products or services, definitely you will be incurring some cost on that. And even in service model, if you have to design something, you will be having some cost, some resources engaged for that activity, which will make you some cost. Then you go into the market just to verify your product or services. We call it, in a startup language, we call it product market fit, where you go into the market, you share your product or service or prototype with the customers, and the customers definitely they test it, they give you feedback, and then you come back and work on next version of your product or services. So this process, product market fit finding process, also requires some funds, some expenditure that incurs. So this is also part of financial life cycle. Then startup launch. So as you know, with the launch of the startup, you need some certain areas. You must have some technical team for the product or the services delivery. You must have some setup. You must have some offices. You will have some utility expenses. You will have some licensing expenses, registration expenses. So startup launch is also associated with some sort of cost that incurs. So that's why it is part of financial life cycle. And this also being shown in the phases. Now come toward the financial management cycle. Once your startup is launched, then there will be a cycle actually, which will be in a loop phase, which will be repeating itself. There will be some expenditure, then you will be expecting some revenues in return. So what type of expenditure could occur during a startup life cycle? We call it financial life cycle. First is products or services marketing and branding. So we call it communication expenses. When we record it, we say that this much of amount has been spent under the communication expenses head for the promotion, for the marketing, and for the branding of our product or services. Next type of expenditure could be supplies of the production. We source some material from third party, we call it supplies or the production process. These type of expenses are recorded under the cost expenses. Third are the variable expenses. These are the operational expenses. They could vary based upon the production or based upon the operations of the businesses. So that's why they are called the operational expenses. Then comes the revenues. So it could come from the sales of product or services, and we record it under the revenue head, and then we calculate the gross and the net profits, that how much expenses were incurred to produce or to sell these product or services, and how much revenue has been collected through the sales of these product or services. Then comes a phase which decides if your return on investment or growth is positive, then you will stay alive, default alive. Otherwise, if your return on investment is going negative or the downward, then you are minus growth. That determines that your business is going to be default debt. So if you pass through these phases, for example, if I say that you successfully stay alive during that period, initial period, then comes up with phase 4, financial valuation. Definitely, when you successfully launch a startup, there comes a phase when you need more funds for the scalability, for the growth, then you have to manage your financial valuation. So financial valuations are only possible when you are all recording the above mentioned transactions and the expense that includes revenue, expenditure, startups cost, product market costs, prototype cost, idea validation cost. If they are not available, for example, you just have expenditure and revenue costs, but you don't have those numbers that when idea was initiated, when it was registered, when it was like patent or the copyright or the trademark were registered, there are some costs associated with it. If you don't include in that, then it won't be a true reflections of your financial health of your business. So just keep in mind, include your own salary into that as well. The time you have spent on building your business, you must charge it during your financial valuation. So there are different financial valuation methods. I will discuss it on the later on slides. Then in phase 5, you go for the investments, loans, debt financing, or the partnerships. And there comes a phase when you go for the expansion, scalability, or there's an exit strategy, which usually most of the startups don't opt. But now in global scenario, if we see there are many businesses, enterprise that opt out for the either exit, they sell out their businesses at certain valuation, at certain projection, or they go public through IPO. So moving forward, what are the primary sources of funds, investments that can come into your business, and how you can raise that? So there are two major type of fundraising strategies. One is non-institutional and second is institutional. So if we talk about the non-institutional, first is personal saving and bonds. It's normally called the bootstrapping as well. So when you start a business in initial phase, when you're on ideation phase, so most of the money you brings into the business that comes from your own personal savings or the bonds or resources which you allocate to your business. It could be in the form of assets, it could be table, it could be chair, it could be any office, which is like your own property. They are normally treated as a bootstrap. So non-institutional type of funding investment could come from your personal savings and bonds. Second is friends and family. These are the major source for the pre-seed startups who are in early phase of their startup life cycle. So mostly your friends and family have faith in you. They are more eager to share their savings or their money with you guys because they trust you, they faith in you. So I usually say my startups, if you cannot raise money from your own friends and family circles, and it's going to be difficult when you go out in the world and ask like unknown investors or the unknown institutionals to invest into your business. So it's really important that your family and friends should have faith in your business, should have faith in yourself. Basically, when you go for the non-institutional, particularly investments, so investors see not only see the business, what you are running, what the enterprise or the startup you are running, they are also see the person behind that. They basically investing into the founders, that how competent they are, how what is their grit, how motivated they are, how well formed they are to execute this idea or the business and the enterprise. Then becomes the angel investors. These are the individuals who have some good wealth with them, and they are exploring avenues to invest into the enterprises and the startup. So they are treated as an angel investor. They don't come under legal requirement. They just sign an MOU or the term sheet with you, and they bring some money. But the disadvantage of this type of investment is that their stakes are very high, because they ask for more equity into the business, because they claim that they are taking much risk at very early stage, so they should have major share of your business. So angel investors are another form of fundraising. Then private equity investors. These are the investors that if you need some sort of machinery, for example, for your business, or some sort of infrastructure for your business. So these are the investors who have that particular thing in their control or in their custody. They offer you that, and in against those equity or against those offering, they want some share of your business as well. So we call them the private equity investors. It could be like in form of agreement as well, and it could be non-agreemental as well. So it all depends on arrangement, what type of agreement you're going to make with these non-institutional, all the non-institutional investors. Like in family and friends, usually they just give you the money and they expect that based upon the promise you made with them that within a 5 year or 10 year, when you will be reaching your profit state of the business, you will return them their money, or they will have some certain stake into your business. Then they usually don't do the documentation. But in the later angel investors and private equity investors, they usually go for the documentation process and they do some sort of writings on the legal papers or on the plain paper so that they could have record in the future and they can claim it at the later stage. Then comes the institutional. Institutional investments or the funds comes when you are already established. Most of the VCs, we called them the venture capitalists, they actually definitely invest into the startup, but they invest into those startups who has already proven their idea, they have already found the product market fit, and they mostly invest into the startup who are in a phase that either uh, whether the investment comes in or not comes in, they believe that startup will survive in any way. So they basically do the very calculated risk and they bet on the horses who are already in the race and they see, yes, this is the horse I'm going to invest. But against that, these venture capitalists or the bank or the financial institutes, they ask for the much higher returns on their investments. In case of banks, different region, different part of the world, every bank regulatory authority, their state banks, they have different profit policies for them that how much interest they will be charging. Similar goes with the venture capitalist. Each venture capitalist have their own structure that how much return they will be looking at on the investment, particular investment. Then comes the mutual funds. Mutual funds are actually funds managed by different organization. These are the funds basically created through public money. So they manage the public money or the corporation money or the private equity money, and they make the decision based upon the financial health of the businesses to invest, how much should be invested, and what will be the terms of the investments. Then comes a hedge fund funds. These are the subsidiary of any big corporations. They are operating globally, mostly MNCs, multinational companies. They are operating into the different region. They create this hedge funds and they invest into the startup so they basically hedge their investment into multiple startups just to be on the safe side. Then comes investment banks or the foundations. They also invest into the startups, but again, they invest their interest rate or their return on investment, they are very high. So moving forward, these are the fundraising strategy, but there are some non-conventional avenues as well. If we called about different grants, different funds proposals, you write them for different non-profit organizations, and if they like your idea, if they like the business model of your enterprise, definitely they give you grant or they give you some sort of funding, but those are not basically they are calculated based upon the impact created by your startup or created by your enterprise instead of they calculate your financial health, right? So they just see your business model, that how you will execute this particular operation and what impact will be created. They don't see the financial health of your business and they don't expect any return on their funding or the grant money. So financial compliance and requirement, there are certain areas which you need to comply with in order to operate as a legal entity in any region or any part of the world. So I have divided into two parts. First, I will talk about the compliances. There are regulatory compliances. Definitely your business or enterprise should be registered with some state bodies. So they have some regulatory compliance which you need to fulfill in order to operate as a legal entity into that region. Then you will have tax compliances that how much you are paying back to the government on the income you are being generated. Then there are certain accounting principles, we call it general accepted accounting principle, that you need to be follow for maintaining a transparent accounting system, transparent accounting books, so that your transaction is legal and genuine instead of just claiming some vague entries and avoiding tax exemptions and regulatory compliance. So this is the ethical process, more of an ethical process, that you need to adopt different accounting standard. Then internal controls, you need to keep in check that your finances are managed by different roles. Instead of having all the authorities into a single person, it also create a risk. So how you cater that risk through creating internal controls, that will be really important to have a good financial compliance. Then anti-money laundering, that the funds or the revenue or the funding you're receiving, it's not being received from any laundering process. Data security and privacy, it's another concern, that your financial numbers should not be leaked, it should be protected, and it should only be accessible to the relevant stakeholders. Corporate governance compliance, there are certain procedures defined by the bodies they are operating. For example, if you're in a trading business, your particular region will have some bodies, trading bodies, they would have some associations. They have certain criteria that these are the requirements you need to fulfill in order to operate into the particular region. So you need to have some corporate governance compliance requirement to fulfill to run your businesses. Then comes the reporting part. Reporting are required for the internal and external stakeholders as well. First of all, financial statements. These will be helpful for different stakeholders we already discussed. Then you need to manage your reporting for quarterly and annually audits. Audits could be internal audits and the external audit as well. Then these financial management is necessary for the financial forecasting for your own self and for the external stakeholders as well. Audited statement, dividend release statement, that are compliance for the larger enterprises, that they need to release a dividend statement on annually basis, so that all the shareholder into your business, they get updated that how much profit you are making and how much profit they are making on their shares. So you need to release a dividend statement on annual basis. Then sustainability reporting, very important today. Global shift towards the sustainability is on a very high note. So you need to be compliant with that sustainability reporting and compliance reporting as well. So before we go further, I think we have just covered our first part of the session today, financial management. So if you have any question, you can ask now. Otherwise, we can move forward, and at the end of the session, we can open the floor for the question and answer.
Yeah, sure, Shiva, sure.
Okay, let's move forward. I think if there...
Hi, I'm Brandon Nilsson, the Compliance Manager at Unique. Right off the bat, you might be wondering, why are you talking about compliance during breakfast? Well, because like having a good breakfast is important, so is understanding compliance. Anyway, now you might be wondering, what is compliance? Why should I care? Well, we've created this video series to answer those very questions. So sit back and enjoy this 72-hour presentation. Just kidding. It isn't that long, and I promise to keep you entertained. Who wants to watch a long, boring video anyway? To start off, let me give you a definition. Don't worry, there won't be a definition quiz at the end, but you'll still want to pay attention. Compliance is about your efforts and Unique's efforts to ensure that we are abiding by both industry standards and government regulations. Kind of how a secret agent has to follow certain regulations. Okay, that was kind of a stretch, but you get it. It's important for all of us to be compliant in our industry for the following reasons. I'm going to get real serious with you for a minute. We need to ensure that we are being good corporate citizens by complying with the laws and regulations in each country in which we operate. We want to protect the company, its employees, assets, and revenue streams. If either presenters and/or corporate fail to be compliant, we all lose this wonderful opportunity. If we do our own risk management, we avoid exposure and liability. Regulators keep an eye on businesses like ours, and we want to stay on their good side. Okay, listen up, this next part is important. You must remember that these regulators do not consider ignorance of the law to be an excuse for not being compliant. So even if you claim you didn't know something, these regulators will still throw the hammer down. Moving on, compliance affects every aspect of running your Unique business, starting with things you must do in order to become an independent Unique presenter. First off, you must be a legal resident or legally authorized to work in your country of residence in order to enroll as a presenter for Unique. even if you have a great British accent. That was ridiculous. Anyway, if you are not a resident of that country, you can't sell there. In order to verify this, we need you to provide us with proper documentation. You can't sign up and work using the name of anyone else. You can't use the name of your twin, alter ego. You get the picture. Okay, back to business. If you give us false information, we have to close your unique account and you will lose all commissions not already paid out. Pretty sad stuff. Along those lines, please don't encourage anyone to go through the enrollment process if they aren't legally authorized to work in their respective country. That's just not cool.
So that was a brief overview about the compliance and the regulatory requirements. So operating in a country or in a region or in a business community, so you need to comply with some legal framework. So we will discuss 6 core steps that you need to follow. First of all, your enterprise must have a legal structure. They should be a registered entity with the respective authorities into your region. So nature of the legal or nature of the business could be either it could be a sole proprietorship. It means it being run by only one person and they have complete ownership of this business. Second type of legal structure for any enterprise or the business could be partnership or the private limited, where there are more than one stakeholders or the partners into the businesses. Then comes the LLC. These are the limited liability companies which are being usually operated abroad or the region, not the primary region of your function. Then corporations, these are the big fishes who operates at a very large scale and they have proper structure into them. And these corporation actually controls the market in general terms. So if you are at a stage where you are treating your enterprise as a corporation, then you are already successful. Then comes the NGO, INGO, international non-government organization, charity, or the foundation. These are the businesses or enterprise who works on the principle of non-profit. So they work on the break even. If I say in the simple language, they don't generate any profit from their activities or the operations. They do all the activities or the operations based upon break-even analysis, that the number of money coming in and coming out always balances in their legal structure. So moving forward, next is intellectual property right. That is the area basically where most of the startups ignore this area, but it's really important that if you are coming with some business operations, you must, in order to stay into the competition, you must protect your intellectual property by registering your trademarks, copyrights, and if it's a novel idea or some unique business value proposition, you must get your patent registered with them, so that in the future or in a long run, you will not only be protecting yourself from the copycats who can copy your idea as well, and plus also you will be giving a tough competition to other players who are trying to enter into your market or who are trying to grab the share from you, into a market share from you, so you can protect your rights. And these are the intangible assets for any businesses. So whenever, if I give you an example, when Coca-Cola started, their actual asset worth might be very low, but it becomes as a brand, so their value goes higher up into the market just because of their trademark and their patents, and nobody can copy it, reuse it, resell it. Same goes with the Microsoft. If we talk about the softwares, when Microsoft started their operations, there were so many resale or redistributors who were just copying their softwares, their applications, their operating system, and redistributing into the market at a very cheap price. But gradually they start controlling these things, and they generated some licenses, and they created some order which basically thrown out of all competition from the market, and now they are enjoying the much bigger share of the market as compared to that time when they were basically open and volatile. So these all protects your rights and protects your business as well. So don't ignore this intellectual property. Then comes the licenses. It's really important that you must have trade licenses, software, hardware licenses, which are being used to run your enterprise or to run your startup. Then domain certifications. If you're operating in some medicine company, then you must have some certification, medical association, so that it creates a sense of confidence or sense of adoptability into the consumer minds that this product which is being offered, it's certified by some authority. So you need to get some domain certification, distribution, sale license. If you're operating or selling the products of other producer or the other enterprise, then you must have distribution or the sale licensing. Then export certifications. If your products are being exported into other region or other part of the world, then you must have some export certification in order to comply and in order to ship your products out of country as well. Moving forward, once you do the business, you come into the different type of contracts and agreements. When you make some partnerships, when you make some retailer network or distribution network, so you make some partnership and collaboration agreements, you make some MOUs with different entities who helps in growth of your business, in operation of your businesses. Then you sign some service or sale level agreement which provide a protection to the consumer that after the product sale there will be some service available by the enterprise or by the entity. Then there should be some non-disclosure agreement. These type of agreement mostly are being signed with those entities who basically with whom you share your secrets or your business processes. So you sign an NDA, non-disclosure agreement, that in process of joint venture or in process of co-collaboration, if they came to know any information, sensitive information about your business, they should not disclose it to the third party and they should not use it by themselves as well. So you sign the non-disclosure agreement with them. Then there are shareholder agreement. If you're raising some funds and if you're diluting your business equity, then you sign the shareholder agreement so that you can protect in the future any unwanted or the unwanted disputes from other stakeholders. Then there are some lease agreement. If you're operating a business in a facility or in an infrastructure that is on the rental basis, for example, then you have to sign some lease agreement. Or if you're getting license of any product or services, there are some certain time period check on them. Then you sign the lease agreement. And if you're going into the business with some other entities to serve the consumer, then you definitely sign the joint venture agreement with them, where more than two enterprises sign together to perform any project, to perform any activity, or perform any business transaction together. In that case, we sign the joint venture agreement. Then becomes the taxation. That is another legal requirement. It comes into different categories. As I mentioned, income tax. It is being charged on based upon the income you are being generated. Sales tax, value-added tax, capital gain tax, general sales tax, and local business taxes. So these are the different nature of taxes. You need to study your own region laws, that what are the applicable taxes in your case. For example, the taxes slab for the product-based business could be different to the service-based businesses. So you need to comply with these taxation laws as well in order to stay, in order to operate legally into your business, right? So you need to study these laws as well. Last but not the least, audit. There could be internal audit, financial audit, operational audit, then tax audit, also environment and energy audit if you're operating with sensitive material and if you're operating in an area that is environmentally sensitive, then you need to comply with the energy and environmental audit as well, quality, health, and safety audits. So these are the different type of compliances when your enterprise operates in a particular region, then you need to comply with all these type of compliances in the legal framework. So moving forward, this is enterprise framework. Enterprise framework, first you need to run a business operations in a smooth manner. You need to have some HR policy in place that should clearly state that how human resource will be managed at the workplace, at the enterprise, what will be their compensation, what are the different policies, discrimination policies, leave policies that protects interest of employees and protects the interest of enterprise as well. Then you should have financial policy, that what will be your financial cycle, what will be like different operation transactional detail into that financial procurement and traveling policy, that if you're going for the procurement, what will be the limit, who will be authority to approve these procurements, and what will be the procedure of procurement, that you need to collect the quotations from different vendors. and then process that according to that. And you need to issue some work orders or the service order for that. Health and safety policy should be in place, and how you implement these policies as an enterprise framework. You do the communication and educate your team, your stakeholders. It could be internal and external. You conduct the training and education.
Use that
You
media
also
to
do the implementation and
my,
integration with your
iPod
existing
set up
system.
my phone.
Jan, I would like if you can just mute your mic.
No, not yet. It's still on my under my older
Yeah, Aziz, if you can mute Jan mic. Yeah, thank you so much. So monitoring and evaluation, these policies should be monitored on regular basis, and legal review and updates should be incorporated as the law of the country or the law of the region in which you are operating. These should be implemented, and these policy documents should be a live document which should be updated on a regular basis so that you stay abreast with the regulations that are being updated. How we monitor and keep check on these policies implementation, whether they're effectively and successfully being implemented in the organization or not. We establish some key performance indicator. For example, if I talk about the HR policy, and we have like working hours policy that office timings will be from 9 a.m. to 5 p.m., then we definitely should have some KPI or the attendance system. It will be a document which will be assessing that who comes on time, who don't come on time. So these KPIs should be established to basically benchmark these HR policies, financial policies, procurement, or whatever type of policy you are managing or implementing. Certain KPIs should be defined. Periodic audits should be done so that you can see whether these policies are effective or not. Risk assessment, if you find any breach into these policies implementation, then you should cover it by proactively reviewing those policy and updating those policy on regular basis. There should be some compliance check whether these policies are not conflicting with the regulatory framework stated by the authorities. You should definitely keep check on these policies as well. And if there is some regulatory framework that brings some changes in their order, then you should update your policy manual and implementation strategy accordingly. And all the changes and all the KPIs should be recorded and reported to the internal stakeholders and to the external stakeholders. With that, I will just move to the last part of our presentation today. After that, we will open the floor for the question and answer. So as Aziz mentioned in the preamble that it is your last session, so I will just give you an overview that what should be the roadmap of a successful enterprise or the startup going forward from initial concept phase to the sustainability phase. We start with the idea validation and product market fit, where your idea is validated and you find that this product is the need of the market or the need of the customer, or they are fulfilling some need of the target market. One thing which I will stress that you should not love your idea, your solution. You should instead love the problem that is being faced by the customer and design your solution or the product around it. Then it will be more chances to be successful into your business domain. Moving forward, business planning, you should have a complete business model canvas, which highlights different areas of business, starting from operation, marketing, cost, revenue, marketing and branding strategy. So you should have complete business model canvas with you, and all the blocks of that business model should be detailed outlines for your understanding. But it should not be like hard copy. It should be like flexible, and you should keep it updating once you go into the field and you test your idea, you test your enterprise. Then definitely it's going to be changed based upon the feedback from the customer, or by changing the dynamics of the market. You need to keep updating your business model canvas as well. Moving forward, definitely you need to comply with the different legal and regulatory framework by different authorities. That includes business registration. You must have legal entity and you register your business in the region. Then you must have required certification for your product or services, intellectual property protection through patents, trademark, and copyrights. These are the basics for legal and regulatory compliance, which should be covered before you go into the commercial scale of your businesses. Next is funding and financial management. To manage the funding and financial management, there are different forms of funding and financial management. You should also manage your transactions on regular basis so that you have sound information for different stakeholders at different period of time. Product services launch, that includes marketing, branding, communication, customer acquisition, and market capturing. These are the area that comes after all the previous 4 steps. Then you go for the product launch, and then you go for the marketing, branding, communication, and customer acquisition, market capturing. Scale and growth, once you reach at a point, break-even point or the profit-making point, then you go for the scale up. You start operation into the different regions and into the different area of your own operating geographical area, or beyond that in different countries, into the different regions. Then you need to do the operation streamlining, expansion, strategic partnership, value reinvention, and the innovation. To stay into the business, you need to rethink about your operations. You need to come up with some innovative idea for staying alive into the business. Last but not the least, that is sustainability. In order to be profitable and well operated, alive entity, you must work on the sustainability, profitability, startup expansion, and community development. So with that, I believe these are the core element, and we try to cover in our today's session. First, market fit is really important for any startup to be successful. If you are going with any product that is either not perfect fit for your market where you're operating, or the market is not ready to basically absorb that idea or that product, and then in that case, startup won't succeed. So first of all, you need to understand the problem, then create the relevant solution, and continuous improvement into that product. Second core area for the success of any startup is execution and team. You should have effective leadership, right human resource should be hired for execution of those operations or the product and services, and you should have operational excellence. You should document all the processes so that it should not be dependent upon any person or any object. If they are not available, then your business should not be stuck or should not be fall. Last but not the least, financial and legal compliance. This should always be followed for a sustainable business. Financial and legal compliance should always be managed. So these are some resources. I just provided the links into the presentation. This presentation will be shared with you. You can go and visit these areas that help you understand your revenue model in a better way. You can opt revenue model as per your enterprise operation. You can select the appropriate revenue model for your own business. Then you can devise the strategy, price strategy for your business model. And last but not the least, startup funding, how it works, what type of evaluations are done by different type of stakeholders, angel investors, venture capitalists, banks. So you need to understand these things. So I have provided these resources for you, so you guys can visit it and learn about these in more detail. So that's it from my side. And now I would request, if you guys have any question, you can just use the reaction tab and raise your hand, and I will try to answer one by one all of your questions. Thank you so much.
You covered pretty much in detail, and I think a very extensive content. They will take some time to process all these technical information, but thank you so very much for covering every aspect of the enterprise. Yes, we are open for questions. Yeah, Rajwanal, go ahead.
Yeah, thank you. And as you mentioned, these are actually a pretty comprehensive topic, so I need a bit more time to comprehend all this. So I actually had a question which is actually answered to the second last slide. I had a question that as a start, when I'm starting something, legalizing is actually costly. Actually, I have researched how to legalize the venture in Bangladesh. So there are so many steps, and the steps are pretty lengthy and very costly. So I had a question in mind, like, do we focus on legalizing first, or do we focus on the product first? So I guess the answer is that first we need to find the market fit, then create a team, and when we find the market fit, then focus on the legalization to make the base more stronger, if I'm correct. And if you have anything else to add with that, any suggestions?
Yeah. So thank you so much, Rijwan. I will just on my second last slide, if you see the order of success for any startup was like, first they need to have some clear business model. They should have some problem statement, relevant solution, and then they should find the product market fit. Second part was about the team, HR, that they should have good leader into the team. They should hire the right resources into the team. And third part was about the legal framework and the financial management, right? So in your team, you can make sure that you bring those resources who take care of these financial and regulations compliance, so that your bases are covered in order to legally operate in any part of your country or beyond the country. Because for every enterprise or the startup, the core thing to keep them alive is the funds. So funds only comes when you have some financial data to back your business. Nobody just throw money out into your pockets that if you don't have any certain numbers to show them of that our business is more profitable, and for the scalability, for the expansion, we need this much of funds. You should have some sort of numbers to back that up. So that's why financial management and legal process, nobody like give you money in personal capacity. They will be investing into your business. So you should keep your personal life and the business life separate. If you just raise money based upon your own, then in the later part of your life, you will realize that those investors, those friends and family, those angel investor, venture capitalists, they will be coming after you. Then in that case, you will be losing your own personal assets or the own personal savings. So instead of that, if you register your company and operate as a legal entity, then all the liabilities created will be for the businesses. So it won't be like investors or the other stakeholder. They will be running after you. They will be rather relying, or they will be just adjusting to the value of that business at the time when they will be asking for their returns on the investments.
Right.
I hope that answers your questions.
Yeah, that answers my question. Thank you so much.
Thank you so very much, Ronald. Yes, anyone else who would like, if it's a question, we welcome. If it is a comment, we welcome. So share your feedback or your comment. I am sharing a link with you all. Go to this folder. You already have access to it. I have included today's presentation as well. Now you are able to have access to all the presentations that you went through in the previous sessions. Along with that, we are also working on a module, kind of a handbook. So probably in a week or two, we will share everything that we discussed in the last 5 sessions. We have your emails, and then we will share that handbook as well with you, so that you have everything in one document and you can refer to it whenever you need any guidance. And of course, videos will be shared with you as well. Yes, any question, James, Joel, Lena?
Yeah, I have a question. So
Go ahead.
first of all, thank you so much for this presentation. That was really, really helpful. My husband and I, we lead a nonprofit organization in Uganda, but we are living right now in Boston. So sometimes it's hard to keep track on all, the financial, everything, everything. So because we're a nonprofit, we also have to we depend on like fundings and grants and everything. So we are struggling right now to decide how much money should we invest in someone we hire maybe as our accountant, or to have an auditor. And we are really struggling. And I just wanted to maybe hear your advice on, how should a nonprofit get into it, have like a stable financial management, but invest as like less as possible.
Yeah. So I got your point.
Okay.
Yeah, I got your point. I think So the going forward, what you can do, I basically discuss with startup when you're in early stage of your enterprise or the business, you have to wear multiple hats. Sometimes you are like a CEO, sometimes you are a CFO, you are doing check on your finances, sometimes you are marketing expert, sometimes you are operation expert, you are sourcing products for yourself, right? So if you're at very early stage, you can get help from different tools available to record your finances. These are online tools like QuickBooks. You can use that. It's very cost effective, $1 per month. You can use it, and once you grow and you're in a position that you have some continuous revenue streams, then you can hire dedicated resources to manage your expenses and your recording your transactions and audits things. But if you're at early stage, then I will advise that uh, uh, do some planning, do some timekeeping, that this much of time from your week you will be giving to the finance part of your businesses and doing the entry transaction recording into the some software, some tools, so that all of your money is all of your money and transactions are recorded and readily available whenever someone joins that role in capacity of finance and accounts manager. They should be able to see that what business has done in the past and where they are actually standing. Then they will bring the additional value to your financial part of your businesses. They can do the forecasting and budgeting. But if you're at early stage, at least through these software, you can record your transactions, your cash flows, that how much is coming in, coming out. And this software also assists you to automatically develop your financial statement that includes balance sheets, cash flow management, and income statements. So you won't have a requirement of a full-time resource. Instead of, if you're early stage startup using these tools, it will be more helpful, and it will also build your capacity for the longer run when your business will grow and you hire a resource. And if resource come into your office and they say, no, we had this much expense, this, you can understand whether they're telling the truth or they're just playing around you, because you have gone through this process already. You understand the transaction, you understand how balance sheets are read, how income statements are read. Then you can generate the red flags. No, this is not making sense, and you need to correct it so that we can make decision based upon actual data and actual numbers, right? And also, when you meeting with different your non-profit organization, you are meeting with different donors, different agencies. So definitely you will show your impact, but your accountant won't go in front of them to explain the numbers. That will be you who will be telling them that we have implemented this much amount, like $100 million grant in the past, and this much beneficiary were served, this much project activities were carried out. So it's better that you must have basic knowledge by using these tools and technologies, and so that you can have at least this much of sense that how it should be communicated to the external stakeholder. That includes your funding agencies, your investors, and other stakeholders. So that's my advice for you.
Thank you. So is there any draft or any like website which you can recommend for getting tools?
Sure thing.
Like,
Yeah, definitely. I just mentioned one, QuickBooks. It's a very
Mhm.
like cost effective and very structured and well proven software that is also available online. You can use it through your mobile as well. So it's a $1 per month subscription, and it generates all the reports for you. You just need to record your transaction, that how much spending you are doing, expenses you are doing, how much money is coming in. You just need to record your transaction, and it will do rest of the work for you. So there are other AI tools. I will share the complete resources link with Aziz, and he can share with you guys it later on.
Perfect. Thank you.
However, we have a question from James. Do you have any sample finance tools, income statement? I think Shawar, you already mentioned that. So
Yeah. So also, I will also share the template, but I think template will can be used as a reference point. But if you are using any technology tool, they will auto create these type of financial statements, income statement, balance sheets. So I will provide these resources and tools to Aziz, and he will share in the group.
yeah, thank you, Shawar. Thank you so very much. Yes, anyone, Alex, anything on your side? Abdurrahman, Joel?
Can I ask one more question?
Yeah, go
Yeah,
ahead.
please.
Okay, so this question is like about electronic science. So when we are onboarding teams, especially remote teammates, so electronic sign is some kind of a sign that's electrically signed. But another thing which is done is like someone takes a picture and adds it in the for like recruitment that the appointment letter. So does that actually legally uh, okay to put a signature photo, and is that actually legalized sample? Like uh, that's the
Yeah.
question I guess.
Yeah. So just to respond to your question, first I will refer to the generally accepted accounting principle. If we talk about that, they have updated their document and it's now globally after, especially after pandemic, COVID pandemic, it's globally acceptable now that most of the businesses and services are being done virtually now. So they accept these e-signature, electronic signatures and electronic documents. But you have to recheck with your own state authorities as well whether they have provision into their system as well. Otherwise, when you go for the audit or for the compliance regulatory compliance, they might create a flag for you. So you need, in general, globally, it's acceptable. But in developing countries or in some regions, it's still not being accepted as a proof or as a evidence document for your in your cases, particularly in financial cases. If you have like give some funds to against some services, but you don't have actual signed document, then mostly auditor raise an objection that this is electronic signature is not accepted. So you need to check with your own state authorities or regulatory authorities whether these type of signatures, these type of recruitments, these whatever type of process, this is electronically acceptable or not, right? As evidence to support your transaction, to support your documents, right? You need to check with local authorities, but in general context, globally now it's acceptable and people are practicing that all across the world, wherever I have worked in the past. And our today's session is actually an right example of this, that I'm delivering this session and some services being offered by myself to you guys and to the entity who have basically arranged this boot camp for you. So definitely this is a proof that I'm physically not there, but I'm delivering my services. So it's a virtual platform, right? So this is generally now accepted, but you need to check just to make sure to avoid any conflict in the future or any consequences in the future. You just need to check with your local authorities as well.
Right. Thank you so much.
Of course. So if you don't have any other questions, I know we are 20 minutes above our time. Thank you so very much, Shehbar, for your time.
No,
And
thank you so much. I
course.
wish we could have more time.
Yeah.
I believe I have justified to the topic, but if you have further questions, you can always like Aziz can share my LinkedIn. You can always reach me out anything about not only financial, anything about your enterprise, about your startup, any stage you are at. I would be happy to help you guys. So thank you so much, Aziz, again for having me today, and it was really good to interact with such a bright minds and aspiring entrepreneurs. And I wish you all best of luck in your future endeavors. You become successful, make yourself, your circle proud, and whatever you do, your community, for your own business, make it more ethical way, make it more moral way, so that overall impact should be great. Thank you so much. Thank you so much.
Shehbar, thank you so very much. And I'm very happy that we had this conversation after many, many months. So I'm very
Yeah,
happy that
please to connect, virtually connect with you. Definitely looking forward for in-person meeting in the future as well. But it's glad that we make a virtual interaction today.
Yes, ma'am. So thank you so very much, Hewa, on the behalf of Center for Awareness Training and Development, and on the behalf of the participant, and on the behalf of the Resolution Project. We are really grateful for your time, and we are really grateful for your knowledge that you share with us. So thank you so very much.
Pleasure. Have a great day, everyone. Whatever
You too.
time zone you are living in, have a great time.
Thank you, Shewa.
Goodbye. Goodbye. Goodbye.
Thank you. So for all of us, just want to mention two important things. One is you will receive an email in the next 2 weeks getting links to all the trainers who have interacted with you, getting all the materials which you already have in the folder that I shared it with you. And then you will also have, another module where you will have a very detailed, all the things are already here in the presentation, but we will also try keep it simple so that you can go through it, and anything you need you refer to these documents. You don't need to go here and there, you come to these documents and then you take help of these and make actions accordingly. So thank you so very much for joining us in these 5 sessions. The recordings will be shared with you as well soon. We'll also keep these recording in the fellows resource website as well. Along with that, in the next batch, in the next boot camp, which is about leadership, so we will more talk about, about yourself, how you can become a great leader. You're running an enterprise. In the next webinar, we will talk about you as a leadership. What are the important things that you as an individual, as a CEO, as a founder, you need to work on so that you can become a great leader as well. And when you are becoming a great leader, your enterprise has been doing all the things that we discussed. Trust me, these two things will come together and this will give you a great success. So for the next leadership webinars, you will also receive an email from Michelle or from any of the team members. Don't forget to come come yourself as well, and also bring each of your team members so that they can build their leadership skills as well. So thank you so very much on the behalf of the Resolution Project, on the behalf of Center for Awareness Training and Development. Thank you very much for your time. It was really, really great that I have you all in these sessions, and you interacted actively. My advice to all of you is, please, I again shared the link with you where you will find all the content. Please take your time, spend 2 weeks studying these documents again. This will really, really help you, make your enterprise well structured, effective, and you can be very, very productive. So take care of yourself. If you have any feedback, anything you have learned amazing, please share it with Michelle, share it with the team members with whom you are in touch. It also helps us, know how our work is impacting you, and you will be receiving a follow-up email as well. Thank you so very much. You should take care of yourself. Remember me in your prayers as well, and I will see you in the another boot camp in the Feb month. Thank you. Take care. Good night, good evening, or good afternoon.
Thank you so much. Allah Hafiz. Assalamu alaikum.
Awesome. Thank you everyone. Take care. Bye.
Bye.